Figma's IPO went crazy this week, and that brings up two really important questions. The first is wondering if the IPO market is finally heating back up in 2025. And the second is, what does that mean for employees of these companies who want more freedom for themselves and their families? I'm Zach Ashburn, a certified financial planner who specializes in corporate exit planning. After back-to-back record years in 2020 and 2021, IPOs really cooled off for the last few years. And this added some complications to an already complicated market, but 2025 has a chance to beat the average on its current clip. Now, there are a lot of reasons for a slower IPO market, things like the pipeline thinning out after 2020 and 2021's boom, growth in private market investments, just general uncertainty with interest rates and government regulations, and the cost in general of taking a company public. It's also been kind of in vogue for founders to stay on longer and retain control of their companies for much longer before going public. So why does Figma matter? Well, IPOs happen in public, and markets and leaders look to past IPOs as they make their own decisions. A lot of people say, but the stock market's doing great, why wouldn't you IPO? And yeah, but no. The stock market has done great over the last 5 years. However, it's been largely attributed to a few big tech companies. So when you add to that a few flopped IPOs, you can see why people would be hesitant to take companies public in that environment. Now, for employees, if you've ever worked at a private company, you may have said something like, I have equity here, but I don't think I'll ever be able to sell it. And this has led to this phenomenon of career progression through job hopping only that we've seen in the last few years. But if an IPO is on the horizon, that changes that calculus a little bit. As we're making corporate exit plans, an inbound IPO is a call to action for employees. Here's 3 ways that it matters. The first is that an IPO comes with a long personal planning timeline too. Whether it's pre-IPO, during lockup, or post-lockup sales, a lot of employees are making these decisions on a whim. And I can assure you, you don't want to be like most employees. The second is, don't let a successful IPO sabotage your exit plan. An IPO pop can lull you into a sense of complacency when it comes to how much of the company stock you want to hold. Make your decisions based on your personal plan, not stock market headlines. And lastly, an IPO is a call to make a tax plan. There are shockingly few advisors and tax professionals who are capable of helping you make a real, personal, proactive tax plan when it comes to a situation like an IPO and company equity being involved. Find an expert to get the help that you need.